black swans and red flags, and sell in May and or go away. Yeah, this market right now, I think has more red flags than my date from this weekend. We're gonna flip through. We're gonna flip through some stuff and check that out. This is Brian Lewis, MMT Investing, your spiritual advisor to the black swan situation. um, but in any case, I'll show you where a black swan will happen, and what the black swan is, who knows, but just the thing is happening. But in any case, this is the magical chart, the euro dollar futures, which I flipped upside down just so that it matches the interest rate cycle. But euro dollars meaning like dollars across Earth. This is the dollar trading, which shows you where the interest rates actually are. So people are talking about the Fed hiking, and as of right now, I think the Fed is like under here. The Fed has room, if it stays where it is right now, to probably hike 0.5. But I don't think that's happening. And so this is the main red flag right here is on the euro dollar future chart, which is a very rare thing to get like a big bear flag on the interest rates. This happened once in a financial crisis. It's really rare to get a big bear flag like this. But I don't know, depending on how you draw it, like I had it like tight like this. I don't know, you can pull it out a little bit like this, but in either case, like it has already broken to the downside. And so the risk of a big down move at any given moment is really high right now. And on the down cycle, so this is the top of the interest rate cycle here. I mean, the whole hiking cycle was pretty aggressive. This was such a steep cycle that we actually had the stock market pulling down during the up cycle. The top of the cycle is just volatile, and you get like some weird topping process. It's usually more bullish than bearish, but we had a bearish sort of inverted topping cycle this time. But when you start the down moves, they're usually pretty violent and pretty quick, and they do absolutely correlate with crashes in the stock market every time it happens. Recessions, just in general, are the backside of this cycle every time. The way down is a recession, and vertical down moves correlate with crashes. Vertical up moves also correlate with crashes, and like each one of these up moves was one of the crashes on this topping process actually. But yeah, anyway, that's where we are in the cycle. I want to flip through some other flags because we're getting these flags across like all kinds of charts here. Not the dollar's not one of them. The VIX has a flag. Yeah, check this out. So the VIX is volatility fear index, and so you have this wedge, right? Breakout top test, boom, and the VIX is exploding to the upside in advance of like not much actually happening on the chart. When you get the VIX exploding, yeah, I guess it correlates with this move here. But when you get the VIX exploding to the upside and not much movement on the S&P, that's like a pretty big indicator as well. And you can see the like longer term divergence, and we're getting like the triple top short divergence here, and we've already broken down underneath everything. So I mean, I think we're pretty well underway. Like just looking at this, you can tell that we've already flipped over and we're kind of underway here on the next down move. And where that goes to, good luck on all of that. But I can show you a couple other things. This is the yield curve. So I mean, you can see the yield curve went way deep inverted. This is a historically deep yield curve inversion, and it's run for like a whole year. It's a super deep, super long yield curve inversion, which indicates like we're going into a big recession that's going to last a while. And so we just have like this kind of bottoming area, but we've had this same thing. Just I mean, this is like I guess a bull flag on this chart, but I'll just call it a bear flag because ripping to the upside here is where you go into a recession. And so it's not really recession territory until you break back into positive. So it's still a little bit early to be like trying to call it a recession, but this is a very clear breakout top test of this. So we've got the VIX ripping to the upside, we've got the yield curve ripping to the upside. The interest rates haven't broken down yet, but they've broken the flag, right? So as soon as you get a big move on the interest rates to the downside, the crash is on, and they probably won't label it a recession until like the jobs, the job numbers. Once you get like unemployment going to the upside, that's when they usually like label it a recession. But who cares? That doesn't really matter. Like, we're already in recession territory. Just comparing the S&P to the NASDAQ, US 100. This is NASDAQ. Almost the same thing. We got the same kind of channel here on the NASDAQ as the S&P, except that the divergence started way back here on the NASDAQ. So I think this, to me, is indicating the NASDAQ is going to be making a bigger down move than the general market, and the divergence is a long divergence. So I mean, just obvious downside target to the bottom of the channel here on both the S&P and the NASDAQ. And if you look at the NASDAQ versus the S&P ratio, you can see that this is the same thing. I mean, we have this is like a 15 or 20 year bull trend of the NASDAQ outperforming the S&P, and this is the first time in 20 years we've broken down underneath this trend where the NASDAQ is actually losing ground against the S&P. So this is a very long-term cycle indicator that some stuff is getting messed up, and we broke down and now we back tested here underneath the trend. So that's indicating to me that the NASDAQ, if we start ripping to the downside, is actually going to be leading down and in front of the S&P, which puts certain stocks at big risk, like particularly Nvidia. Nvidia is probably the leading stock in the NASDAQ right now. It's semiconductors and AI. It's like the big bubble stock in the NASDAQ right now, and it's way off downtrend. Like, we have this same downtrend in like 30 different charts, and this one is as far off the downtrend as you can get. We have the same kind of downtrend. The second biggest one is Bitcoin, and yeah, this downtrend in Bitcoin, same thing. I mean, Bitcoin can pop pretty high off downtrend. Like, this was a really big pop here, but you can see here the same thing. You get the big bear flag here, and this is a rising wedge bear flag that's super aggressive, and we've broken out of that, and you can see pretty clearly like it's painting a sharp line on the angle of the downtrend here. So yeah, if we start heading down on Bitcoin, it's very clear like the direction, the exact downtrend line that it's on. And so if we get like no big news and nothing important, like Bitcoin probably like just kind of bobbles under this until it crosses over back to trend. If we get a big random event, like boom, it can go straight down to trend from here. Bitcoin looks really bad from here, and it's just a matter of like when does it drop. And you can see like this same kind of thing like on Coinbase. Same kind of downtrend, just kind of floating above the downtrend, like starting to turn down. Same kind of thing, Tesla on the downtrend. It's like popped up from the downtrend, like aiming down. This one's interesting because it has like the longer term kind of bull channel that it's testing right now. So I mean, Tesla looks more like an immediate threat. Like if it breaks this channel, boom, like straight down here, it looks like. But I mean, I think most of these things, if they break down, are going to move together, and they're going to move together when the interest rate cycle does its first down move. And so like usually on the interest rate down cycle, it's more steep and more aggressive than the up cycle. But this up cycle was super steep and aggressive. And yeah, like as I was saying, like the Fed interest rate levels is sitting about here. It's still underneath it, and it has room, like there's a lot of room here for it to come down without the Fed freaking out. I mean, if they get upside down 0.25, 0.5, they probably aren't going to really worry about it that much. If it goes past there, it's going to be emergency rate cut. Like they're going to come out like, oh, blah blah blah, whatever. There's going to be some blah 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 attached to that. But like if it drops like way down here before the next Fed meeting, like they're going to have to come out and announce an emergency rate cut. Because on the way up, like the Fed just kind of follows this cycle on the way up, and it just says stayed underneath it, and not that big of a deal. Like if the Fed's underneath where the interest rates really are, like that's just like a little bit extra money coming out. Like they want inflation, and so that pushes inflation to stay underneath it. But on the way down, if they're above it on the way down, this like just accelerates a contraction in the monetary supply, and it puts the U.S. banks in like a position where it's hard to operate, and so they don't mess around with that. They don't mess around on the way down. Like they'll chase it. I mean, they just about never do like an emergency rate hike because they just follow it up, and they're on their schedule, which is not actually moving on that schedule, but on the way down, if they get upside down, like 0.5 may even be enough. They do an emergency cut, but if it goes more than 0.5 below where they're sitting now, it will be an emergency cut in a hurry. So yeah, just like watching out for that. And just talking about like black swans, I don't know, there's a ton of stuff to probably talk about. Like the obvious one is, I have like the banking KRE. KRE is the small banking ETF fund. And so this is the same bear flag that you see across all these charts forming, right? But the banks have already like ripped out of here. Check this out. So, let's get in here. Yeah, so you can just see like huge red volume, right, and a gapping move to the downside. So I mean, this is a super weak descending bear flag that has just collapsed out to the downside. And I have this like list of banks that are in, at high risk of getting in trouble. And a bunch of these have dumped out, like Zion dumped out. Some of these smaller ones that just are like way upside down on their treasuries, they just have terrible balance sheets. And they're small banks that are at high risk. People are pulling all their money out. In terms of a black swan, like this is the number one obvious thing, but it's not really a black swan. Like this is just like what happens when the banks get like totally upside down and the interest rates are too high. Their treasuries are upside down and they can't sell them without losing money, and so they got to go do like the emergency like loan from the Fed kind of thing. But it's not like, people are calling all of that a bailout, and it is not a bailout. Like they're getting a bad loan at a bad rate from the Fed, and they can't just sit on that forever. Like that will collapse the bank itself. So yeah, black swan number one is, I don't want to say the BR phrase because the Google bots might might ghost my video here, but the brr, let's call it a sprint on the financial institutions is the number one obvious kind of black swan. But again, like I wouldn't really consider that a black swan. And then we have the world political situation is obviously a mess. I mean, we have the war going on in Ukraine. And actually the war ending in Ukraine is my number one pick for the big news story that comes out correlating with this big dump. And it has a lot to do with oil as well. But like what's happening now is Russia's already claimed all the territory they said they wanted to claim. Pretty much the last city in this whole war is Bakhmut, and Ukraine's out of soldiers. And like I think, there was actually news. I actually need to go look up what's going on. There was news about like the Zelensky like fleeing the country and some sort of attempt on Putin's life or something. Like there's a bunch of like random news coming out now that the war is like getting weird. But I mean, basically Russia's claimed the territory they wanted to claim, and they'll just go to the peace table, and like that section of Ukraine is just gonna get chopped off, I think, is just pretty much what happens there. It's like the whole area in the south, and then like the Donbass region is like the green region. So they're just like the people that speak Russian are near all the natural gas. Like that's the territory that Russia came in for, and they already have it. And then the Donbass is like a green area, and that'll be negotiable probably. And I think that's pretty much what's going on over there. But it sounds like that war ending would be a good thing, but it's not going to be a good thing. What it's going to do is it's going to really affect the price of oil. Like you'll have all the Russian oil coming back online, and yeah, you had the OPEC cut the oil supply a couple of weeks ago, and so the oil price popped to the upside on the supply cut. And then I saw tons of videos that's like, oh, oil is gonna go to 200 now, like blah blah blah. Like absolutely not, not right now. Like we're rolling into a recession. The reason they cut the production is because nobody's gonna be buying oil as you roll into a recession. That slows everything down. People buy way less oil, so they're just cutting production into the recession starting, and it's just like that simple. And oil comes down during recessions like pretty much every time. And so that's it. Like you got the pop on the oil cut, and now the oil is just continuing its down move that it was already on, breaking 64. So I mean, the oil trade, like this is kind of the area that's, I have this like kind of center line, like pretty much above this line is high oil prices, below this line is normal oil prices. We're just coming back sort of into normal price range. And then if you started breaking down lower than this, that's getting into low prices. But yeah, I mean, pretty much that's during the recession. Oil price probably just come back down to lower levels. Like in COVID, the oil came way down, and well, the oil futures actually went negative, which is pretty crazy. But actual barrels of oil didn't go that low. But I mean, the barrel prices went down to like almost $10 or something for a week or two there, at the bottom of the COVID crash. I don't know if it would roll that low, but yeah, usually like oil is a little delayed. Like some other stuff will crash first, and oil will follow usually. But actually, right now, oil is actually kind of leading to the downside. We have other risk assets holding up, like the FANG stocks are holding up still, Bitcoin's holding up still. The banks, yeah, pretty much banks and oil banks are definitely crashing on their own here. So yeah, the bank crash should probably happen now, and then once interest rates start coming down, that actually helps the banks because their treasuries will be not like destructively negative. Like they'll be able to actually sell some treasuries and cover their losses and stuff like that. But I mean, looking at the banks, like I have this short list of banks here. I have like 6 of them. Oh yeah, and First Republic is gone. Like that stock ticker was up this week. JP Morgan bought them yesterday, I think. And so they're gone. First Republic's gone. But that was a bank that collapsed, whatever it was, 3 weeks ago, and it was just in negotiations and whatever. But their stock price went from around 100 to 15 like 3 weeks ago, and this week it went from 15 to 3. And then JP Morgan bottomed out, I don't know, less than 3, I would imagine, probably like $2 a share or something. But anyway, that's the first one to actually disappear. And there's no bailouts or anything happening there. Like they just got bought out, and their customers go straight to JP Morgan. And yeah, all of these other ones are at risk of the same stuff happening soon. Like Comerica is a big one. US Bancorp has a terrible balance sheet. Zion has a terrible balance sheet. And these are small banks, so people are taking their money out of small banks right now. Plus, they're way upside down on their treasuries, so they cannot sell their treasuries without huge losses. So they got to go borrow money from the Fed, the new facility, just to operate, so that people can draw their money out. But then they're holding that loan from the Fed at a loss. That's not a bailout. That's a loan at a pretty bad interest rate that they have to hold at a loss anyway. So these banks are getting in big trouble. But the other thing is, like, it's not just treasuries they're upside down on. They're holding a ton of commercial real estate as well. Like mortgage-backed securities with commercial real estate don't look awful this week, but the commercial real estate is looking absolutely terrible, and those mortgage-backed securities are going to be absolutely terrible on their balance sheets as well shortly. And so we could see a ton of banks. Like I have like whatever 6 or 7 banks that I picked out as like the highest risk ones that I could find with the worst balance sheets. Yeah, like these: Zion, PacWest, Western Alliance is awful. KeyCorp is awful. And then I had a couple ideas, like Ally Bank is one that hasn't really crashed yet that I thought has a lot of room to come down. And they're also like Bitcoin friendly, and they have a ton of like loans that are over the FDIC limits. Like it's a bank that isn't supposed to be bad, but it looks pretty bad to me. That one, or Toronto Dominion. Like the commercial real estate is terrible in America, but in Canada they don't have fixed rate mortgage on their residential, and the Canadian housing market did not crash when the American housing market crashed. So in Canada, the residential real estate is as big as the risk as commercial, and maybe even bigger there. And this is the bank I think that has the most risk in Canada, Toronto Dominion, and it hasn't really crashed yet. So I thought that was like an interesting one that may be a short play. And this is not financial advice, any of this stuff, as usual. Just you know, my personal take. Do your own research. And then in terms of the big banks, like Citibank, there's whatever 6 banks that are big banks that are shareholders in the Fed, like the New York Fed. Citibank's one of these, but Citibank has a really ugly balance sheet in terms of a big bank. Like they're just bleeding money for the last like 4 years, and they have a lot of room that they could come down. In terms of just ones that haven't already like dumped, like those 3 in particular, Ally, Toronto Dominion, Citi, are super ugly. But yeah, I think in terms of chasing some of these smaller banks is probably a little bit late. A little bit late. Like it already has done like both dumps, and we're flipping over into the down cycle now, and the banks have sort of led it, but yeah, that's just kind of where the market is now. You know, and you can see we're just kind of going into like this volatile channel and topping out, and we've already broken down off the channel now. I mean, we did break down off of it once already. We broke down off of it once and re-bulled onto the channel, but now I think this is actually busted now. We're gonna break all of the technical levels probably by the end of the day today, and then who knows? I mean, this could take a couple of months or whatever and slowly wobble down. Like the bottom of the channel is the obvious downside target, breaking the lows. But you know, we'll have to kind of see. We'll kind of have to just see what we get there in terms of like the general S&P kind of coming down. The high yield chart is good. Like the high yield, this is like the corporate bonds. And so corporate bonds usually are a leading indicator. Like the Euro-dollar futures are a really good leading indicator that actually tells you where you are in the interest rate cycle. And then the high yield, once you start a downtrend, like that's kind of going to be the topping area, and then what you get like a drop. You get a drop that correlates with a crash. Like this was the COVID crash. This was like the 2018 crash. And then once you break out of the downtrend, that's like the beginning of the next upcycle on the high yield. And as you can see, this one is just absolutely monstrously huge, and we're just checking underneath the downtrend now. And so if we get a down move here, like it should drop out before the stock market. The main stock market kind of drops, although the banks have dropped before this did this time. But this is still usually a really good leading indicator. And you see we're kind of like rejecting out of here. So, you know, the next couple of days, if this starts dropping out, that's, you know, another really good indicator that you're starting a down cycle. But in terms of the actual down cycle, like you just look at the interest rates, this giant mess here. Yeah, I mean, before the Fed announces something, like you'll see this chart move to the downside weeks or even a month. Like the Fed's like a month behind on what the interest rates are actually doing, like all the time. You'll see it same day on this chart, and like this can teleport to the downside in one day. I mean, some of these gaps to the upside, this is one day, like wham, those are huge upside moves. This is really, really, really volatile. And downside moves can be bigger than these. So I mean, it's possible to teleport like way down here, like halfway back to zero in like a day. If we did that, like, yeah, it would be a huge deal, and there'd be a big stock market crash attached to that. And then you would get the news about some kind of black swan kind of thing. Yeah, I mean, like, I guess like Bitcoin and stuff like that collapsing might be a huge deal. I think the commercial real estate market, a lot of people have talked about that, but you could have a huge like immediate like thing in the commercial real estate market that's just like, oh, it's like totally upside down, and you're having like a huge, you know, catastrophe in mortgage-backed securities. These are all just like really obvious trends that are happening anyway. I mean, in terms of black swan, like, you know, yeah, I've heard people be like, World War III is possible. Like, that would definitely be that would definitely be a big black swan if there's like some like nuclear freaking thing or something like that. But you know, this is like the time period when crazy stuff happens, and it actually doesn't particularly matter like what happens. It just like stuff happens at this point in the cycle like all the time. And the last cycle, like this big down move here was the COVID crash, and it's like, oh, like we have this huge world event like right on perfect time with the big down move. Interesting. But it happens like every time. Every time there's a big down move, then you go back to the financial crisis. It's the same thing. Like this little down move here was the Lehman Brothers, and this is the flag. This is the bear flag that we got at the beginning of the financial crisis. That's very similar to what we have right now, except the one we have now is like 4 times this size. It's like the most volatile thing in the history of this entire 40-year down cycle or something. But yeah, this is the financial crisis crash. And so, you know, we had like the financial crisis. It wasn't like a world war or something like that, but yeah, that was the financial crisis. And this whole down move here, it's more gradual, but this is the dot-com bust. And in terms of recession, like it was a more mild recession, and you can see like it's more gradual on the down. But it was still a huge like bust in pretty much the dot-com thing. Like this was like the internet like got popular and got a huge amount of investment, and it just like bubbled and blew off. And then after that, like the internet was pretty normal and just built gradually over the last 30 years or whatever. But this time, like right here at the bottom of the financial crisis is when Bitcoin came in. And so like this whole mess of stuff that's been going on is sort of like the Bitcoin bubble. And people are saying everything bubble, like yeah, sort of, but like Bitcoin is the huge, crazy blockchain. Blockchain's sort of like the new internet sort of thing. It's, you know, a new technology protocol that can operate similar to like what the internet is now. It's like a huge communication and storage network that, you know, I mean, blockchain, Bitcoin is for contracts and cash transfers, you know, rather than just random data like the internet is. But, you know, it's another protocol similar to the internet that you can build like a crazy amount of stuff. But yeah, it's weird because like Bitcoin is just becoming like an investment asset, like just holding Bitcoins, rather than like a ton of companies like coming out trying to develop stuff, and it's just like a bunch of nonsense, and only like 5 companies make anything that matters. There's very little that has been built on the blockchain actually, and yeah, so that's a little different than like the dot-com bust. But anyway, that's kind of where we are on the cycle. We're just hanging on the edge of the top here, and once we start the down move, stuff's gonna get pretty interesting. And that's where I think that's it, man. If you're still here, I'm so sorry. This is a long-winded mess of you know, pretty much the normal stuff. Smash the like button, share, subscribe if you want, and that's I don't know, maybe I'll look at like gold or something real quick. I think gold and silver are doing fine. Yeah, this is interesting. Like we're still at the top of the cycle, And so gold and silver are liking all the inflation. Like we're getting high inflation, we're at the top of the interest rate cycle. So this is fine for now. But I would expect gold and silver to, once we start coming down, usually you get margin calls, and gold will definitely pull down with margin calls, and then it usually recovers, and then silver will follow that, except that silver has exposure to, like, oil and commodities start coming down. Like silver is commodity, so it's like half monetary metal, half commodity metal. So that's usually what happens on the down cycle, is silver kind of eats it. Like silver and gold pull down at the beginning, and then sort of silver keeps going down and gold recovers, is usually what happens on the down cycle. And you'll see copper like doing poorly and silver doing poorly and gold recovering. That's usually what it looks like. But we'll see. Like if we get a gradual small down cycle, like silver and gold might just continue to bull if inflation stays high. Now we'll just have to see what the down cycle looks like. But that's the general idea with like the monetary metals. Yeah, okay, that's probably good enough. Good luck with all that stuff, and happy trading.